So TPM, as you'd all be aware, they're in the process of merging with Vodafone Australia. They were expected to pay a special dividend prior to that, which they just announced on Friday. So that's basically 50 cents, give or take a little bit. We were hoping it was closer to 60, but it's still very material. It's a 6% cash yield at today's price on that. We recently did upgrade TPG to an ad recommendation, and just reminding you, it is our number one pick. So 3 reasons why we are buyers of TPM now. Number one, if you're looking for a defensive stock, it does tick that box, but it also has catalysts looming and growing free cash flow. Number two, those catalysts are imminent, so you've got the merger vote this month. Assuming that gets approved, then you get this 6% cash or 9% gross special dividend. You get a broadly similar amount, which is a in-species distribution of the Singapore mobile assets, which will be listed separately on the ASX. And then finally, you get entry into the merged entity, which is a strong free cash generating business. The final reason we're buyers, this company always surprises on the upside with cost out. David Teo, the founder and chairman of TPG, becomes the chairman of the combined group. He has a history of being razor focused on free cash flow through tight cost control. Given David Teo will own around $2 billion worth of the combined entity, we think it's fair to say he'll still be pretty focused on the cash generation in this business. And then finally, if you look at our latest TPM note, you'll see in the merged entity, we're assuming they're able to bypass about 10% of their customers bypassing the NBN. So instead of paying the NBN, putting it on their mobile network. It's hard to quantify, but that number could be as high as 30%, not the 10% of their customers that we're currently forecasting. So if that does prove to be the case, there's an extra $200 million per annum in EBITDA and free cash flow that this business would generate. So we think there's upside risk to the free cash flow. The next catalyst for TPM is the merger vote, which gets held on Wednesday, the 26th of June. It's a scheme, so you need 50% of shareholders to vote and 75% of votes to be in favour. David Teo and Sol Patterson's between them own 60% of the group. They represent 2 of the directors, and they've said they'll vote in favour, so it seems all but a done deal to me. Assuming that all happens, what technically happens is Vodafone acquires TPM, the listed entity TPM. It gets delisted, renamed and relisted later under the code TPG. So TPG will finally be TPG. Yeah, that's basically the process. There's a few moving parts there just to be aware of. So that's TPG. Happy to keep buying that.